Have you ever wondered how Bitcoin, the first cryptocurrency, came into existence? In the midst of the 2008 financial crisis, when trust in traditional financial institutions was at an all-time low, a white paper titled Bitcoin, a peer-to-peer electronic cash system, was published on the internet. The author? An elusive entity named Satoshi Nakamoto, whose identity remains a mystery to this day. This marked the beginning of a new era in finance and technology, the era of Bitcoin. Bitcoin was introduced in 2009 as a virtual currency, a digital form of cash designed to function outside the control of any one person, group, or entity. Its purpose? To serve as a decentralized form of money that can be sent from one user to another on the peer-to-peer Bitcoin network, without the need for intermediaries. But how does Bitcoin work, you might ask? It operates on a decentralized network called a blockchain. This is a public ledger containing all transaction data from anyone who uses Bitcoin. Transactions are added to blocks or the links of code that make up the chain, and each transaction must be recorded on a block. But who keeps this public ledger? Enter the role of the miners. These are individuals or groups who use high-powered computers to solve complex mathematical problems that validate each transaction on the network. Their reward? A new Bitcoin. This process is known as mining. Bitcoin can be bought or sold on various cryptocurrency exchanges, much like stocks on a stock exchange. It can also be stored in digital wallets, ready to be sent or received at a moment's notice. However, Bitcoin's journey hasn't been smooth sailing. Its value has seen multiple boom and bust cycles, reflecting its highly volatile nature. Despite this, Bitcoin has continued to captivate the attention of investors, tech enthusiasts, and skeptics alike. And so, Bitcoin emerged as a revolutionary financial instrument, challenging the traditional financial system. Its introduction sparked a wave of innovation, paving the way for a multitude of other cryptocurrencies and blockchain projects. From a mere concept in a white paper to a global phenomenon, Bitcoin's genesis is a tale of technology's potential to reshape our world. But what about ETFs, exchange-traded funds? How did they come to be? This question brings us to our next chapter in the evolution of financial instruments. ETFs, like Bitcoin, represent a shift in how we think about investing. The concept of an ETF is relatively simple. It's a type of investment that pools together assets, much like a mutual fund. But here's the twist. ETFs trade on stock exchanges throughout the day, just like individual stocks. This means you can buy and sell ETF shares at any time during trading hours, not just after the market closes like traditional mutual funds. ETFs are also designed to track or even outperform specific indices, sectors, commodities, or other assets. This gives investors the opportunity to gain exposure to a wide range of markets without having to buy each individual asset. Now, let's take a step back in time. The first ETF made its debut in 1993. It was called the Spider S&P 500 ETF, also known as SPY. This pioneering ETF was designed to track the S&P 500 index, providing investors with a way to invest in 500 of the largest U.S. companies all at once. But the benefits of ETFs don't stop there. They typically offer lower expense ratios and fewer broker commissions compared to buying individual stocks. This makes ETFs a cost-effective way to diversify your portfolio. And ETFs can contain a variety of investments, including stocks, commodities, bonds, and more. This means you can use ETFs to spread your investments across different asset classes, reducing your risk and potentially boosting your returns. And so the rise of ETFs began. They quickly gained popularity among both individual and institutional investors for their flexibility, cost-effectiveness, and potential for diversification. Thus, ETFs offered investors a new flexible way to diversify their portfolios and manage risk. Today, they continue to shape the landscape of modern investing, bridging the gap between traditional financial markets and the evolving world of cryptocurrencies. But that's a story for the next scene. Stay tuned. What happens when you combine the innovation of Bitcoin with the flexibility of ETFs? In the ever-evolving financial landscape, Bitcoin ETFs emerge as a bridge between traditional financial markets and the fascinating world of cryptocurrency. These ingenious financial instruments allow investors to gain exposure to Bitcoin without the need to directly own it. Picture this. You're interested in investing in Bitcoin, but the prospect of buying, holding, and securing it seems daunting. Here's where Bitcoin ETFs come into play. They operate much like shares of a company that you buy on a stock exchange. Instead of owning actual Bitcoin, you own shares in the ETF, which tracks the price of Bitcoin. This way, you indirectly invest in Bitcoin without having to navigate the intricacies of crypto exchanges or wallets. But what makes Bitcoin ETFs so appealing? Firstly, Bitcoin ETFs bring the allure of Bitcoin to the mainstream. They allow anyone, regardless of their technical prowess, to invest in Bitcoin. You don't need to be a tech wizard to participate in the Bitcoin market any more than you need an engineering degree to drive a car. Secondly, Bitcoin ETFs come with the reassurance of regulation and security. As SEC-approved investment products, they offer a degree of investor protection that's often missing in the direct crypto market. Thirdly, Bitcoin ETFs enhance liquidity. They're easily bought and sold like stocks, making it simpler for investors to enter and exit their positions. Then there's the advantage of portfolio diversification. Bitcoin ETFs allow investors to include Bitcoin alongside other assets in their portfolio. This can potentially spread risk and enhance returns. And let's not forget the pull of investor demand. The growing interest in cryptocurrencies is driving demand for Bitcoin ETFs. For instance, within 17 days of its launch, BlackRock's Bitcoin ETF became one of the top 5 ETFs of this year based on inflows. Bitcoin ETFs, therefore, are a game changer, opening up the world of cryptocurrencies to everyday investors. How are Bitcoin ETFs reshaping the investment landscape? This is a question that's been circling the financial world as Bitcoin ETFs surge in popularity. To give you an idea of their impact, let's look at some recent data. BlackRock's Bitcoin ETF, for instance, rocketed to the top within just 17 days of its inception. It quickly became one of the top 5 ETFs of this year, based on inflows, with a staggering $3.2 billion year-to-date inflows. Similarly, Fidelity's Wise Origin Bitcoin Fund, or FBTC, has also been making waves. It secured the 8th spot among ETF asset gatherers this year, with inflows totaling $2.7 billion. These figures are not just impressive, they're indicative of a larger trend. Both the IBIT and FBTC have consistently seen positive flows since their debut, pointing to a growing investor demand for Bitcoin ETFs. So why are Bitcoin ETFs garnering such attention? Well, they bridge the gap between traditional financial markets and the cryptocurrency world, offering a regulated and accessible way for investors to gain exposure to Bitcoin. They provide mainstream access to Bitcoin, allowing investors to invest without directly owning the cryptocurrency. This is a game changer for those who want to participate in the Bitcoin market but are wary of the complexities of crypto exchanges and wallets. Moreover, SEC-approved Bitcoin ETFs offer regulatory oversight and investor protection, which is a huge step forward in the often murky waters of cryptocurrency. Beyond accessibility and regulation, Bitcoin ETFs also enhance liquidity, making it easier for investors to buy and sell Bitcoin. They provide an avenue for portfolio diversification by including Bitcoin alongside other assets. The rise of Bitcoin ETFs is not an isolated phenomenon, but rather a reflection of the growing interest and acceptance of cryptocurrencies. It's a testament to the shifting dynamics of the investment landscape, where digital currencies are gaining traction and reshaping traditional financial structures. In conclusion, Bitcoin ETFs are not just a trend, they're a testament to the growing influence of cryptocurrencies in the financial world. Still unsure about Bitcoin ETFs? Let's simplify it. Think of a Bitcoin ETF, or exchange-traded fund, as a bridge. On one side, you have the bustling world of cryptocurrencies, led by Bitcoin, a digital currency operating on a decentralized network known as the blockchain. On the other side, there's you, eager to invest but perhaps unsure about navigating the often complex crypto landscape. That's where a Bitcoin ETF comes in. It's a bridge that connects these two sides, allowing you to invest in Bitcoin indirectly. You see, when you buy shares in Bitcoin ETF, you're not buying Bitcoin itself. Instead, you're investing in an ETF that tracks the price of Bitcoin. It's akin to buying shares in a company, like Apple or Google, on a stock exchange. So, how does it work? It's as simple as investing in stocks. You open a regular brokerage account and buy shares in the Bitcoin ETF. As the price of Bitcoin fluctuates, so does the value of your ETF shares. This offers a straightforward way for anyone to dip their toes into the Bitcoin market without the complexities and technical know-how of direct ownership. But why does it matter? Well, there are several reasons. First, it's about accessibility. Bitcoin ETFs open the door to anyone wanting to invest in Bitcoin, even if they're not tech savvy. Second, it's about regulation. ETFs are regulated investment products, providing a level of security and oversight that direct cryptocurrency investments may lack. Next, it's about liquidity. ETFs are easy to buy and sell, just like stocks. Finally, it's about comfort. Institutional investors can partake in the Bitcoin market in a format they're familiar with. To sum it up, Bitcoin ETFs offer a simple and accessible way to invest in Bitcoin. They bridge the gap between the traditional world of investing and the exciting yet complex realm of cryptocurrencies. With Bitcoin ETFs, anyone can have a slice of the Bitcoin pie without the complexities of baking it themselves.